Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Tuesday. Yep, it's tax day, April 18th, 2023, about 6:05 p.m. Central Time. So we're in the middle of earnings season, and we're getting pretty crazy action after the market. Netflix came out, was waiting to see what happened there, and I think that the first call on it and look at it was all wrong by the analysts. They dropped the market over 10%. It was a big drop. And I turned my back, walked away. I was reading the report. I'm going, well, it looks like to me like they're doing pretty good in the areas where they put in the new thing where, you can't share your password. You have to pay a bit more money. You can give it away as you have the first unit, other people have the other, and the paid advertising where you can get it at a cheaper price, your Netflix, but you're going to get ads in there. I think it's firing fine. Before you knew it, an hour later, the market was higher on the day. So, and I'm talking the aftermarket. We'll see where it all ends up in the morning. United Airlines has come out, a series of banks have come out, and Western Alliance came out. And I think it's important because, we keep talking how these mid-tier banks are going to be in big trouble, and they were, of course, one of them. Well, they added $2 billion in deposits. You heard me. That's a pretty good number. So through April 14th, money flowed back into them. Yet, in the aftermarket, if you will, our full market, but what the stock people look at is the aftermarket, stock indices are lower. Fascinating. When we come to the S&P 500, you can see the market has come up, and the big question is it going to get up over the 4,200 level and be able to stay there? You're only 23 points away, but you haven't been able to do it. And then people will say, well, where do you go from here? What happens? Blah, blah, blah. It's a hard one. This market has defied all the odds. So far, the beats for the earnings season are doing the job over. Those that keep saying, Morgan Stanley's clearly one of those, that you're going to see earnings, they're going to get hurt, and others are right with it. But they have been very much on the wrong side as this market just keeps fighting its trend. Which trend? It's fighting the bears trying to say, well, here's what the Fed is going to do, rightly so, but it isn't happening. The Fed's doing its job. Mr. Bullard, St. Louis Fed president, came out today. He wants more hikes. I used the word plural in there. We'll see. Mr. Bostic came out today. He thinks it's one and done. So you're getting people flipping all over the place that want to see what it is, but they're all uniform in one thing, data dependency. Well, right now, you can see this market has come back up, and you're in this zone. This is the resistance area. Mark that down on your chart. You've climbed there. Is the market going to be able to get through it, or is it going to come here and swoop away to the downside? That is what the trade doesn't know. This is what they're fighting. The pattern is still one of higher lows, higher highs, bullish. The market is over the 18-day average of closes, bullish. The market has not been able to get over the upper Bollinger Band, attacked it back here, but it hasn't for a couple of weeks. That is a potential target, and you have an embedded reading. So until the red line closes under 79, I have to be in the bull camp, have to be in the camp that on the breaks, if you understand the enhanced Bollinger Band rule, people that have all taken the course know that. I think the pros keep buying the breaks on that caveat, what's in that course, looking for these new highs. When we come to the NASDAQ, not the same picture at all. This market, number one, if you look at the readings, you have a reading in the 70. You're overbought. You're not embedded. Yes, you have the higher lows, higher highs, but an overbought condition, as I define it, means that new money doesn't flow to this market. It flows to the markets where the trend's already in place and churning away. This isn't doing that. It's doing so in the Dow. You have the embedded reading, just like in the S&P. You have the pattern of higher lows, higher highs. A potential target is up here at 34,694. When you hit the first time the 100-day average and the Bollinger Band together, that stopped for a moment, the rally, for about 3-4 days. But then it's gotten over it, and now here's the pattern that's trying to develop, which is bullish. What if the 18-day average gets up and over the 100 at 33,701? That would be momentum flipping back to the upside, and you'd have a classic bull case in terms of moving averages. You'd have the shortest term average, then the 18 over the 100 over the 200. That doesn't mean magically you have to run, but the odds favor it. That's what it would cause, in my opinion. Not the case in the Russell. Here, too, you have an overbought market, readings in the 70s. You got layers of resistance up here. Trying to fight that, that's a very difficult fight. So while you have the swing line up, and while you have the bias up and the trend, you're overbought and layers of resistance. Better places to be. Then we get to the bonds and the notes. The market is caked in. It's baked. It's all there. For a 25 basis point hike on May 3rd, I'm already hearing conversation in the industry. Well, this is where the Fed chair, is he going to waffle and say one and done in any manner allude to it? Is he going to say they're staying very data dependent? Is he going to sound very hawkish, dovish? Which way? Right now, the market is betting the hawk is still at play. The market still has, number one, sticky inflation. My prediction, that stickiness isn't going away. There is no way you took off that Gone Goo or Goo Be Gone. You know, that stuff, I buy it all the time and use it, where you can just rub it there and all of a sudden the stickiness is gone. Not going to be the case. Rents aren't going down as dramatic as people think. You get that one swoop down and that's about it. Food inflation has pulled back, but I don't know that it's crashing at this point. But those are volatile items anyways with energy. Shelter's a big element. Did you take a look at what happened on the housing starts and permits today? When you looked at the number, you went, it's down 0.8% in the starts. Well, that's correct. They were looking for down 3.5%, not as bad. But when you strip out dwellings of 5 units or more, they soared to the upside, single-family homes. Permits, strip out the 5 or more permit places. They soared. So the single-family homes are still big demand for them going on. That is still taking place, and that's with high mortgages. You're into the support zone in the 5-year note. You're oversold. You're in the dollar index, back into a downtrend. Now, to negate this trend, it's pretty simple. All you need to do is take out Monday's high of 101.92.5. If that's taken out, you break the downtrend, and if you can stay over the 18-day average, you're back into an uptrend. If you can't do it, you've opened the door back to the 177 level or lower, in my opinion. Eurocurrency, you've corrected past tense. Now, you're no longer in overbought territory. None of these numbers are in 70 level. The trend is up, higher lows, higher highs. I think the market's looking for reasons to be long until it gets back under 1.0946. That would be the number, 109.46. Trend is remaining to the upside. Potential target, 110.81. When we get to the British pound, you have some divergence going on. You've had momentum going down, swing line to the upside, bias to the upside. Trend up, had momentum down, it's suddenly leveling off. So in this market, to get bearish, you have to take out 123.70. For support, it's going to be, I think, 124.29. Potential target, if it decides to move to the upside, 125.53. There's still many problems awaiting this market. If you've been watching the junior doctors, the nurses, nothing that I see has been resolved there. This could be a big, big strike coming up at this point in time. In the Bitcoin, higher high, lower low, very overbought. I'd let somebody else want to own that. When we get to the differential between Brent and WTI oil, it was holding for a long time in the 4 to 440 area. It's crashed to a new low of 389. You are losing the embedded reading. Let me phrase this very carefully the right way for you. This is the close of business today. On the close, you lost the embedded reading. Prior to this, the numbers were sitting there both over 80s. See them going like that? And all of a sudden you lose it. That's often a prelude that the market is going to see prices coming down and try to get back to the key moving average. The problem is it's hit the average. It's on it at the 200-day. That was the goal, and it went right to it. It lost it the day it hit the average. The next set of averages could be the 100 and the 18 right here, but you do have support, but you're overbought no matter what you do. I think the smart money has gone to the sideline here. I think they're flirting with doing it in WTI. As you can see, you're not there yet. If you look at the settlement on Tuesday, you didn't lose the embedded reading. You're flirting with losing it today. If it loses it, the objective will be, depending on where it's at when it's lost, on a closing basis, 79.31 to 78.51. So you're getting your pullback here for that support. And in gasoline, let me show you what happens when you lose this rule. You know, again, in my website under the word education, this is all there. But if you and I go together here, you're embedded. You can see the numbers. You lose the embedded reading. The odds are when that happens, you're going to get back to the red line, the 18-day average of closes. Tell me what happened there. That's the edge. Sometimes you get these plays, often, I must say that, where momentum leads price. And it gives you, as a gentle person, man, woman, the opportunity to come out before the market goes in the direction of wherever that closest main moving average is. I explain this all the time. It happened here. You had your embedded reading, you lost it. Came down, tried to get it back, lost it again, and you took off to the upside. Why does that happen? This happens because you've got people on one side of the market and they realize via price, not momentum. This is at least my theory, not momentum, that they're on the wrong side. The market's doing something they didn't expect and they're buying their ways out of their position or selling their ways, depending on which way the market had been going. So that's my explanation of it. I talk about this. I teach it in my different videos, and I want you to join me. What I do is at 5:15 to 5:30 in the morning, I start recording, and I cover the whole gamut of the futures markets. The charts will look like this. They're going to have a dark background. They're going to have the Bollinger Bands, more moving averages, a couple of different features that you don't get here, but they're real important features, and that's why you don't get them here. This is what the people want to see. And what we're going to do, we're going to talk entry, exit points, chart setups galore. We're going to cover at least 40 charts, if not more, probably more like 45 or so. We cover all this, just like in Star Wars, the whole spectrum there. This is going to be Monday through Friday. On the weekend, we're going to do weekly charts with you. And then there's going to be occasionally bonus charts that I throw in. Bonus reports will come in there. Things I think you need. We're talking swing trade. We're talking longer term trades. A lot of you wonder, oh, it's in and out. It isn't. You can be in these things a very long time. Basis the weekly chart, as I teach you can be in it a very long time. So that's not true. I am certainly not a person that would be labeled a day trader. I'm what you could be called a swing trader. I'm catching those moves. And if you get up to the key numbers that I have, window envelopes, Bollinger Bands, I'm trying to get you to take money off the table. Will we have losses? It's a guarantee. Who doesn't have losses trading? Will we try to control them? Absolutely. Will you know approximately what the risk factors are? You will. Be it you lose the embedded reading, be it a straight stop, there'll be points in there. So how do you get this? Go to our website, under research, give yourself the sign up, and then you'll start getting everything. If you're here on YouTube, there's a button on the bottom that says join. Give that a click, you can do it. Or if you're watching us and just want to come in a different way, move your cursor up here, an icon will appear, give it a click, sign up, and away you go. It's that simple. I'll see you in the morning then. I'm Ira Epstein. You have a good day.